If you hold a green card, you already understand the effort it took to obtain it. The applications, the waiting periods, the uncertainty at every stage. You worked hard to secure your permanent residency, and you deserve to maintain it. But here is something that surprises many people, even those who have held their green card for years. Your tax filing behavior can have a direct impact on your immigration status. That is correct. The IRS and USCIS may appear to function in entirely separate spheres, but the reality is that they exchange more information than most people appreciate, and certain tax errors can set off serious consequences for your residency. Today, we are going to walk through 5 of the most common and most potentially damaging IRS tax mistakes that green card holders make. These are mistakes that could jeopardize your permanent residency, create obstacles in your path to citizenship, or in the most serious cases, lead to proceedings that put your ability to remain in the United States at risk. This is information that every green card holder should be aware of. So please stay with us through the entire discussion, because the final mistake on our list is one that blindsides people more frequently than almost any other. And as always, everything shared in this video is for informational and educational purposes only. It does not constitute legal advice or tax advice. Immigration policy and tax law are subject to change. Always confirm details through official sources such as USCIS and the IRS, and consult with a qualified attorney or tax professional regarding your individual circumstances. Let us begin with some essential background. When you become a lawful permanent resident, a green card holder, you assume an important legal standing in the United States. That standing comes with rights, absolutely, but it also carries responsibilities. One of the most significant of those responsibilities is your obligation to comply with United States tax law. Under federal tax rules, green card holders are classified as resident aliens for tax purposes. That means you are generally required to report your worldwide income to the IRS. Not just earnings generated within the United States, but income from every country on the globe. This is a critical distinction from the tax systems in many other nations, where tax residency is determined solely by physical presence. In the United States, holding a green card establishes your tax residency. That obligation persists for as long as you maintain your green card, even if you spend considerable time living outside the country. That is the foundation upon which everything else rests. Now let us examine the 5 mistakes. The first and perhaps most fundamental mistake is neglecting to file a federal tax return altogether. You might be surprised at how frequently this occurs. Some green card holders, particularly those who came from countries with vastly different tax systems, simply do not realize that filing a United States tax return is a legal obligation, not something that is optional. Others believe that if their earnings were modest, or if all of their income originated overseas, filing is unnecessary. That belief can lead to deeply damaging consequences. The IRS establishes income thresholds each year that determine whether you are required to file, and those thresholds are updated annually. You should review the current guidelines on the IRS website at irs.gov every filing season. But here is where your immigration status enters the picture directly. When you apply for a naturalization to become a United States citizen, USCIS will require you to demonstrate that you have been a person of good moral character throughout the statutory period. A central part of that evaluation involves reviewing your history of tax compliance. USCIS has clear authority to deny a naturalization application if the applicant has willfully failed to file required tax returns. Beyond the naturalization process, willful failure to file can be treated as a federal offense under certain circumstances. And in removal proceedings, a pattern of tax non-compliance can be presented as evidence against a green card holder. The IRS and USCIS do share data through interagency information exchange mechanisms, and government attorneys can request access to tax records. So, if you have missed filing a return in any recent year, the very first step you should take right now is to speak with a tax professional about how to prepare and submit those overdue returns and bring yourself into full compliance. The IRS has established procedures for this. Coming forward voluntarily is always a better position to be in than being discovered. The second mistake is failing to report foreign income. This is among the most widespread misunderstandings affecting green card holders who were born abroad and continue to have financial connections in their home countries. Whether it takes the form of rental property income, business earnings, an inheritance, investment returns, wages from a foreign employer, or pension distributions, whatever shape that income takes. If you are a green card holder, it is generally subject to United States taxation, regardless of where it was earned or where the funds are held. The United States operates under a taxation model based on both citizenship and residency, which is relatively uncommon globally. Most nations only impose taxes on income generated within their own borders. The United States, by contrast, taxes its residents, including green card holders, on their entire global income. There are, however, mechanisms designed to prevent being taxed twice on the same earnings. The foreign tax credit, for example, allows you to reduce your United States tax liability by the amount of taxes you have already paid to a foreign government on the same income. Many countries also maintain bilateral tax treaties with the United States that can influence how specific categories of income are treated. But those treaties do not eliminate your obligation to disclose the income to the IRS. They affect how that income is taxed, not whether it must be reported. Failing to report foreign income can result in substantial civil penalties, and in situations involving deliberate concealment, potentially criminal charges. From an immigration standpoint, a criminal conviction or a finding of tax fraud can initiate removal proceedings and can permanently disqualify a green card holder from becoming a citizen. The IRS and the Department of the Treasury treat foreign income reporting as a high enforcement priority, and the resources devoted to this area have grown considerably in recent years. If you have income from sources outside the United States, work with a tax professional who has expertise in international tax matters and ensure that you are completing all required forms accurately each year. The third mistake, and this one catches even financially knowledgeable taxpayers off guard, is failing to file the report of foreign bank and financial accounts, commonly referred to as an FBAR. If you have a financial interest in or signature authority over one or more foreign bank accounts, investment accounts, or other financial accounts, and the combined value of all those accounts exceeded $10,000 at any point during the calendar year, you are required to submit an FBAR to the Financial Crimes Enforcement Network, known as FinCEN, which operates under the United States Department of the Treasury. This filing is entirely separate from your IRS tax return. It is submitted electronically through the FinCEN website, and the deadline is April 15th, with an automatic extension available through October 15th. Many green card holders maintain accounts in their countries of origin that they either forgot about or never realized triggered a reporting requirement. The penalties for FBAR violations are severe. Non-willful violations, where the failure was not intentional, can still result in penalties amounting to thousands of dollars per account per year. Willful violations, where the government can demonstrate that you were aware of the requirement and chose to ignore it, can lead to penalties of up to half the account balance per year, and in the most extreme situations, criminal prosecution. From an immigration perspective, financial offenses and tax offenses fall within the categories that can lead to removal from the United States. There is also a related but separate reporting obligation under the Foreign Account Tax Compliance Act, which requires filing Form 8938 with your regular tax return when your foreign financial assets exceed certain higher thresholds. If you hold any financial accounts outside the United States, visit the FinCEN and IRS websites, familiarize yourself with your obligations, and consult a qualified tax advisor without delay. The fourth mistake is abandoning tax residency without properly notifying the IRS, or conversely remaining abroad for such an extended period that your green card is considered abandoned by USCIS while simultaneously ceasing to file United States tax returns. Let us examine both sides of this issue. Some green card holders relocate to their home country or to another country for a prolonged period and simply stop filing United States tax returns, assuming their obligation ended when they departed. But your tax obligation as a green card holder continues until that status is formally terminated through the proper legal process. The IRS has specific procedures for formally relinquishing green card tax residency. This typically involves filing a final tax return and, in certain cases, submitting additional documentation. Until you complete that process, the filing obligation remains in full effect. On the other side, USCIS monitors the duration of time that green card holders spend outside the United States. As a general matter, absences exceeding 6 months can raise questions about whether you have effectively abandoned your residency, and absences stretching beyond 1 year typically create a presumption of abandonment that you would need to overcome with evidence. If USCIS determines that your green card has been abandoned, you could lose your permanent resident status entirely. The intersection of extended absence, ongoing tax filing obligations, and the continuous residency requirements enforced by USCIS creates a precarious situation for individuals who divide their lives between two countries. If you are spending significant time abroad for employment, family caregiving, or any other reason, speak with both an immigration attorney and a tax professional. Document your continuing ties to the United States carefully. File your returns faithfully every year. And explore what re-entry permit options may be available to you through USCIS to protect your status during periods of extended travel. The fifth mistake, the one we mentioned would come as a surprise to many, is using an incorrect tax filing status or claiming deductions and credits in ways that do not align with your actual life circumstances. In particular, some green card holders file as non-residents using the wrong tax form when they should be filing as residents, or the reverse. Others claim the standard deduction when their specific situation calls for itemizing, or they claim credits for dependents who do not satisfy the IRS definition of a qualifying dependent. And in some instances, individuals file as married filing jointly when they have been separated from their spouse, or when their spouse does not properly qualify as a tax resident. Why does this matter for your immigration status? Because USCIS and immigration courts examine the full picture of your life when assessing whether you have been honest and law-abiding. Filing a tax return that contains inaccurate statements, even if the errors were not intentional, can in the worst scenarios be characterized as fraud or willful misrepresentation. And willful misrepresentation to a federal agency is something that can follow you through every subsequent immigration proceeding you are involved in. Beyond that, USCIS specifically reviews tax returns as documentation of your financial life when evaluating applications for naturalization, when processing adjustment of status petitions for family members, and when adjudicating other benefit requests. Inconsistencies between the information you provide on immigration forms and what you report on your tax returns can raise red flags that invite additional scrutiny and potentially jeopardize the outcome of your case. The practical takeaway here is to work with a competent tax preparer who understands your full situation, including your residency history, your family structure, your income sources from all countries, and who can prepare your returns correctly from the start. Now let us bring everything together with some concrete steps you can take right now. First, if you have not already done so, retrieve your tax returns from the last 3 years and review them carefully. Did you file for every year during which you held your green card? Did you report all sources of income, including income earned outside the United States? Did you disclose all foreign financial accounts? If you identify any gaps or errors, contact a tax professional about filing amended returns or submitting overdue returns. Taking action voluntarily and proactively is always viewed more favorably than having discrepancies uncovered by the government. Second, visit the official IRS website at irs.gov and search for guidance specifically written for resident aliens. The IRS provides dedicated resources explaining your filing obligations, the credits available to you, and the foreign account reporting requirements. Third, if you maintain foreign bank or financial accounts, visit the FinCEN website and review the current FBAR filing requirements for the applicable tax year. Fourth, if you are planning to spend an extended period outside the United States, contact an immigration attorney before your departure. Understand how your absence may affect your green card status, your eligibility for naturalization, and your ongoing tax filing obligations. Fifth, if you are beginning to consider applying for United States citizenship, schedule a consultation with an immigration attorney who can review your tax history alongside your immigration record and help you identify whether any past issues need to be resolved before you submit your naturalization application. USCIS will inquire about your tax compliance during the process, and you want to enter that stage fully prepared. As of April 2026, USCIS continues to evaluate good moral character as a core component of the naturalization process, and tax compliance remains a significant factor in that assessment. The IRS continues to enforce FBAR filing requirements aggressively, and interagency cooperation aimed at identifying non-compliant taxpayers has strengthened in recent years. Policies and thresholds are subject to change. That is simply the nature of tax and immigration law. So always consult official sources for the most current information before making decisions. Before we close, here is your important reminder. Everything we discuss on this channel is intended to provide general information and education only. It is not legal advice, it is not tax advice, and it should not be relied upon as a substitute for professional guidance tailored to your specific circumstances. Immigration law and tax law are complex disciplines and they evolve over time. Rules that were in effect last year may have been modified. Always verify current requirements directly through USCIS at uscis.gov, through the IRS at irs.gov, and through the Treasury Department's FinCEN at fincen.gov. And for matters specific to your personal situation, please work with a qualified immigration attorney and a licensed tax professional. You invested too much effort into obtaining your green card to risk losing it over something that could have been prevented with timely action. The encouraging reality is that most tax issues, when identified early and addressed proactively, can be resolved. The critical thing is not to ignore them and not to assume everything is in order if you have never taken the time to verify. Spending an hour today reviewing your tax history could protect years of hard work and the future you have been building in this country. If this video provided you with something valuable today, whether it was a new insight, a question to bring to your accountant, or a specific step to take, please take a moment to give it a thumbs up and share it with someone you know who holds a green card. These are precisely the kinds of details that can easily be overlooked, and passing this information along to your community could make a meaningful difference in someone's life. Subscribe to US Updates Hub if you have not already. We cover the developments, the policy changes, and the practical guidance that affect your life as an immigrant in the United States. And we are here consistently with updates you can actually put to use. Check the description below this video for links to official resources, including USCIS, the IRS, and FinCEN, where you can verify everything we have discussed today and access current information relevant to your situation. Thank you for being part of this community. Your journey matters, and we are here to help you navigate it with clarity, confidence, and the most reliable information we can deliver. Take care of yourselves and take care of your families. This content is for educational and informational purposes only. It does not constitute legal advice.